I'm Ian Harris. I'm president and CEO of Outcrop Silver, where we have our flagship Santa Ana project in Colombia, which is one of the highest grade silver projects in the world, and we're currently drilling.
Good to see you here.
You too. Always nice.
You didn't have as long a journey as I did there.
I did come from Colombia.
Did you? How are things over there?
Yeah, it's quite nice. It's hard to leave, right? It's being close to the projects and the people and the team. It's I enjoy being there.
Good. Well, while we're on the topic of Colombia, politics, life good, mining, pro-mining, anti-mining, what's the situation?
You know, there's always a mixed signal, and, you know, there's so many different jurisdictions, and Colombia obviously had the current president not so favorable towards coal and oil, and that, you know, bled over, but he is very much focused on the energy transition and the use of the minerals in the mineral wealth of Colombia to make sure it's participative in that energy transition. And of course, silver, clearly with its importance, especially in solar, it's actually probably one of his pet metals. We love solar panels.
Well, absolutely. In fact, that came made me smile when I was going through all your news releases recently. You were at a conference which was all around that. We weren't talking a precious metal conference. It was people wanting to understand, well, what's silver's role there?
That's right. Well, actually, there's a lot of excitement. We're in the department of Tolima, and we're in the town of Falan, and the pride associated with having one of the few silver districts in the world, because there's really not that many of them, especially primary silver project, and the importance that is associated with solar. So we've been working very closely with the Secretary of Mining, the Secretary of Sustainable Development, did a whole big conference associated around it locally. And maybe I'll save a little bit when we talk about more what's happening locally, but really embraced the importance of the project and how special it is, and how, you know, they feel a part of it, right, is critical in moving projects forward. I should take a teeny step back. I'm a mining engineer, and I like being part of projects that can become future mines. And those little things are so important in order to have a sustainable project moving forward and getting into production. And many times it's thought of after resource happens and you're getting into a PE or feasibility, and then you go, maybe we should consult locally, right? But, you know, I'm a strong believer you have to make them part of the process right from the very beginning and build a collaborative type environment.
Good. And the other thing that's been happening, if I looked at silver price at the beginning of the year, you know, compared to where it is now, obviously it's a better environment now. Do you feel like some companies are getting ahead of themselves, getting a little bit excited and say, well, silver's here to stay, and the way to play it is expect much higher silver prices, or is it, you know, caution need or tempering needed in there? How do you view it?
In general, remember, I am a mining engineer, so I'm not a geologist who looks in billions of years, right? Or a trader who looks in terms of weeks, right? I do see that range between now and, you know, 5 years kind of plan. And the backdrop of silver is so compelling, right? When you see that only 30% of silver comes from silver mines, meaning a lot of them are more agnostic to price, so they don't, you know, price could go, and it really, a new copper mine is not going to be built because of their silver, even if it goes to, you know, 200, right? It doesn't make a dent on it. And then you look at things like solar, where 60% growth in silver demand, which is 20% of the entire demand, you know, the entire supply of silver. So incremental, you know, we're in that. But chessboard's good. I don't know if you ever saw that, you know, the story of the king playing with the merchant, and he said, what are we going to play for? And one grain of rice and double it every square. And the king is playing, he gets about halfway through the square and he goes, right? We're getting into the curve where now a 20% growth in solar demand, right, is a huge component of silver. And we can't grow as an industry more than 3 or 4% a year. So it's an inevitable crunch is going to happen. Is it tomorrow? Is it, and what's the catalyst? But you know it's going to happen, right? So there's a lot to be said that, you know, the future of silver, but I always try to bring it always back is I have to create value today.
That's what I'm you say.
And that's very important. And that's what we're trying to do this year. Right. This year, we have 37 million ounces. It's all in the northeast section. We have a very long corridor currently titled, and it's about doing larger step outs, testing a bunch of new veins to say where are our big step ups and resources going to come from. But very important, have as many as possible so that I can say, I know how much I'm valued per ounce in the ground. Which ones of these add the most ounces per meter drilled as I start drilling it towards resource, and making sure that number is much smaller than the number I'm currently valued at, so that I know, even in today's market, that I'm creating value as we're working down that path. Right.
Now, in a world where most company CEOs pretty much say the same thing, it's very hard for retail investors, family offices to actually kind of break through that white noise and understand who's got the best chance of doing this. I always revert back to business model, because business model can make clear about how the company's going to try to move things forward. You've talked about not getting ahead of yourself in terms of silver price. You can't rely on that. You can rely on what you're in control of today. So maybe kind of remind people about that business plan first, and then if you can help me understand how you differentiate yourself in that kind of silver, massive silver companies, pure play and byproducts, it's all in the mix. So how do you stand out?
Okay, so the first one is, many times when you're looking at an ore body or whatever, there's always an inherent risk associated to it. Our resource is built off of 7 different veins, but we have already mapped out over 25, and we're generating new targets. And that's why the idea this year is to test as many, drill test and say, does it have the grade? Does it have the width? How much ounces? What's our success rate? Put that all into a nice little spreadsheet and literally go, which one do we predict will create the most ounces per meter? Right. So we're taking, trying to de-risk that exploration, the geological risk associated to a project by having more opportunities, right? More tangible opportunities. And I think that's one of the advantages we have, that we can actually do that with a higher level of confidence, that as we grow a resource, and we want to grow it considerably, not 10% or 20%, but double, or potentially triple the size of the resource, that we're creating value along that. As we're spending money, we're making sure we're creating value. But what really nice, but without forgetting about the potential in the background. So we've talked about this a little bit. There is a parallel strategy that we are working on to make sure that we can get perhaps a smaller size project into production, doing the work that de-risks it. So then you have that lever if you need to pull it, right? Like, if silver goes up, then you can take advantage of that. And we're also very leveraged to silver price, because 75% of our resource value is silver, right? Only 30% of silver comes from silver mines, and it's probably a little less than that, right? So they're not very common how leveraged the project actually is, right? So at 75% of the value, we're highly leveraged, and we're also one of the highest grade projects in the world. And I'm not talking one of 30, I'm talking one of 2, 3, right? So it's extremely high grade, which helps a lot. We have excellent recoveries, which also means we have payable, so we maintain that value through a potential production stream.
Okay, a few things to get in. I'm going to go in them in order that you said them. So this kind of, I don't know if you'll call it drill to kill, but basically profiling these veins to see which targets warrant this expenditure efficiently. So can you just talk about that profile first of all?
We actually just put out a release trying to help build that story recently, because you see, this has been drilled out. We actually have a couple that have been drilled out. These still, are part of the resource. These are where we think we can get. These ones we're going to test, and it's kind of building those targets through that process. And it starts with the initial legwork on the ground. And that's the other big part of taking these big step outs, is getting the boots in those areas, right? Which is also leverages the relationships that we've built over time. We've now built the reputation and the confidence that allows us to expand our overall footprint. Right, is that you're using geophysics, sampling, mapping. Here a geologist finds a nice rock and they pick it up, and I know I'm oversimplifying it, but then it goes into more advanced techniques, where such as you're going in and you're doing channel sampling. Maybe there's an old adit that you can get access to, or trench work. It's more intrusive and it's more expensive, but we want to do all those things to say, okay, this is now drill worthy, right? This is now worth testing, and we got to, because you see something at the surface, you're seeing grade at the surface. How does that end up looking underground? And you want to get in there with a drill hole to confirm mineralization continues. But we have a third aspect too, is that we're actually following an horseshoe. So you have a vein. How does it look like underground? You got to kind of predict it. You hit the vein, you hopefully hit mineralization, right? But then we're also trying to pick where that horseshoe, and then can have a different dip than the actual the plunge can actually be very different. So all this science is going into it as we're moving individual projects to say, now it's ready. Oh, and then it goes to another qualification is how many ounces do we predict it would add per meter that we drill into it? And so I think we're quite methodical about the process that we put into place over the last, year and a half.
Right. So that the methodical process is what you want to do. You're an engineer by training. You want a systematic approach to this, right? You want to be efficient with this, right? The market, a little bit unsure about what it wants, it seems, okay? I know silver investors may be a different type of profile. They are a unique beast, should we say, very enthusiastic. But for people looking in who don't understand it, how do you go about building up that picture of, right, we're going after these 7 things, we've got a process, methodical, it takes time, we don't want to blast through lots of drilling, we're not going to waste money doing this one. You've got to time the market in a way, but you also got to enthuse the market. So in the market we're seeing at the moment, we're silver at over 28?
$28, $29.
Yeah, so it's like toying with 30,
yes,
but it's certainly a lot better than it was back in January. So it's all good, but you've got to be conscious about how you play that game to get people to look at you. Come back to my original question, like, how do you stand out from the crowd? There's a lot of silver stories, a lot of noise out there. What else do you kind of bring to that mix in terms of showing the value creation, how this thing gets valued by outsiders, not you, who may want to build this thing?
I think the truth is if you run some filters on things and you say, how many projects have a resource? How many projects have a resource that's primary silver, right? The list gets very short very quickly. We're not talking about a lot of different individuals. So you look at things in terms of grade and current valuations, and it's a good indicator. And it's I'm telling you, it's not more than 10 projects, right?
It's not, but then there's still a few things you need to fill in there, a few blanks, which is like the scale, recoverables, payables, all of that kind of good stuff.
I would argue that the simple level is how many ounces and what's their valuation and how much is out each ounce, and then how are they going to deliver additional value to whatever they're doing, right? So that's the easy stuff. But then how do you qualify one project better than the other? And I won't get into the cost structure, which is one of the huge advantages of Colombia in terms of what the mining costs would be.
Because ultimately it's about margin, right? You gotta make.
But the big buckets are grade.
Okay.
If I mine a ton of that material, and you could say, if it's the same mining style, everything equal, it's going to cost pretty much the same amount of money to take a ton out. So how much is that ton worth? Then what's the recovery? How much do I get of it? Then it's the payable, and many people miss the payable, right? Because one of the things we're really excited about Santa Ana is we have such a high grade concentrate. We know we'll get a high payable because they're paying for a precious metal concentrate, and perhaps we could even create doré directly. But sometimes it's a zinc concentrate, or it's a lead concentrate, or it's a sulfide concentrate. So you're sending it to a smelter for lead or zinc, and they don't pay you 100% of your silver. If you're lucky, they pay you 75%. So you're losing value through that overall chain, right? What I would like to think is how things get rated are, what's not the grade? What's the payable grade, right? To be able to work it through, because that's really what I'm getting paid for, right? At the end of the day. And that is one of the huge advantages of Santa Ana. We can maintain that high. We had started at a very high number, but we're going to maintain it through as that production change and you're actually getting money in the bank, right?
It's just, I find it incredible that investors don't ask that question more often, because we're not in the mining game, we're in the money-making game.
Correct.
Right? So let's remember that.
So sometimes you get the recovery question, which is good, right? But then after that, but what's the payable? So I love seeing when you do equivalent calculations and people say zinc to copper, and then they just use the recovery, and but the smelter doesn't even pay you for 100% of, a copper smelter might pay you 98% on your copper, but a zinc smelter is only going to, there was a time I remember, because I ran a zinc company, we were only getting paid 50% of the value of the zinc, right? 50. So payable is important. It's very much important.
It's quite good, because we've just done a report on a company called IR Gold and Silver, and and one of the guys contributing into that report actually ran a smelter in the same part of the world, and he was talking about that very topic, recoverables and payables. And you think the assumptions sometimes made by whoever puts these economics together, clearly not done by anyone who's actually worked there in the industry. So it's I'm glad you're talking
because I ran a copper, zinc, gold, silver mine in Saudi Arabia, and was actually selling the concentrate, and so obviously pretty intimate and understand how this works, and that's what's. And I'm an engineer too. At the end of the day, you got to make an economic project, so that's the fundamentals of Santa Ana are very exciting because I know we're gonna have a very nice cost structure. You have mining experience in this type of systems. There's big projects around us that are operating, big gold mines that have this very same type. We have high grade, we have high recoveries, and potentially very high payable. It's got all the secret sauce. And then the last one I was kind of saving, right, is all this work and all the attention. You know, I get hurt when people see some of the social stuff we're doing and they call it fluff, because for me, that fluff is actually what makes mines, right? That at the end of the day, it's not always the environmental or political or et cetera. It's they don't like you and they come up with an excuse. So if people don't like you, I know I'm simplifying it, right? It's about votes. And then politicians want votes. So they jump on the bandwagon that gets them votes. So if they see a project that's got a great reputation, it's got a strong support, and building that support, right, has to be real support. It's not because you're handing out water bottles or doing these little things and taking pictures. It's about why I live in Colombia. It's about building strong relationships, having people truly involved, right? That the uniforms are being constructed locally, right? It's not just by going to the grocery store, but finding where the eggs come from, you know, getting as much involved in the community as possible in the project, and being open about the way you work. And one of the things that happened at Fallen, which is the town closest to the project recently, is they had their annual festivals. Every little town has their annual carnival, right? And they came out this year. They wanted to put the Fallen letters in the center of town square, and each one of the letters represented something. They do this a lot. People take the picture with Instagram, and it says Fallen in the backdrop. And L was legacy, and it was the legacy of silver and the future potential of silver. And literally, there's the letter, and it's got a nice solar panel on it, and it's got a geologist looking at core. And for me, that is the number one indicator that it has now gone from, it's their project too. It's a source of pride for the community, right? And for me, that's a huge indicator that we're doing the right things on the ground, and that's going to support potentially, hopefully, a future operation.
I think that's fine. We recently did some filming outside in Seville, southern Spain. Where most people go, Spain here, but surely not mine.
Rio Tinto
there, Grupo Mexico, you know, lots of.
But the Rio Tinto mine is right, and it's not.
That's right.
So,
I was there, and we filmed outside the town hall, and there's a big banner outside the town hall going basically, "We love mining." Mayor trots over and goes, "What are you guys here for? We're mining." Yes, you know, really, and that makes such a difference in terms of it being real and no objections. And even if, say, NGOs come in or whatever, trying to stop things, the community is going, actually, we got this. Just go away. It's a real big point. And I know some people talk about, ESG and board, shitless of it. But the truth, sorry, apologies, folks, mum and dad at home. The truth is, it's social is so important to the ability of a company to actually get into production.
I'm not a big believer in ESG because ESG is about the reporting. I hear you. And I'm much more on, you got to do it on the ground. You got to build the relationships. You got to find ways to get people involved into the project. Yeah. It's so critical. And that's really what matters.
I hear you. And I don't want to get on that track. We'll get abused for doing it. So what I do want to do is come back to that kind of that lever that you've kind of got ready to pull if silver does its thing, which is being able to get into early cash flow. Can you do that again for newbies to this? Just explain the kind of setup there, because I think it's quite cool.
Okay, so obviously when we have all these components, and the main number one strategy is outing ounces to a resource for cheaper than I'm currently getting valued for silver. So even if things just stay the same, that is the number one strategy. And I know that we've seen the numbers. We know we can create value down that pathway. But on the background, we're also trying to, you're trying to get to a number. I'm going to throw out, say we get to 100 million ounces. That's a kind of a threshold. We go, ready, let's go on a project development. You're doing a PEA, a pre-feasibility, all this engineering work, right? But there is also a way of looking at just a very small scale project, looking at maybe a pilot scale, right? Getting something into production, because it is always easier to expand a permit than it is to permit something brand new, right? So you have that ability to, if things start going the right way, you can get into production quickly and start scaling a cash flow instead of having to wait. To be fair, it can take 2+ years just to permit, right? To get a permit, after a permit submitted before you even get a valuation, then there's a construction period. So having that a quicker pathway has been very important to us. And the advantage is because when you have high grade, you have high recovery, you have potentially high payable, you are decoupled from scale. Right? Sometimes projects have to be big because you hear it sometimes they're lower grade, but there's a million different reasons. But to make them economic, they need the scale. And so Santa Ana is such a great project because I'm confident, even at a small scale, even if the priority today isn't cash, right? It could be in the future, right? It will still be a cash positive. I believe it will be a cash positive project, which also de-risks significantly the project looking forward and answering some of those questions we're going to have as the project starts advancing and thinking ahead. So I do like thinking we have a primary strategy that has to work today, but we also aren't ignorant and we're thinking about what happens under certain different conditions. Even the opposite. Say things go the other way and the equity markets just dry up and you're dead. At least you have the ability to
get any worse, can they?
That's arguable, right? But unfortunately, over the last 10 years, I've said that a few times, right?
Okay.
Yeah.
Tell me it's going to be okay.
So it is using that experience of 25 years, 15 years living in South America, and applying that to say.
So in all seriousness, let's look at what that looks like in terms of releasing that lever, as it were, because cash is king when life is good, and cash is king when life's not so good. So it allows you, it gives you optionality, it allows you to do things you wouldn't, and sometimes that's just quite frankly keeping the lights on, right? For you though, looking at the price now, looking at how your 10 years experience, and looking forward, you've got to take a 20. We don't want to remind ourselves. We want to be able to say, look, there are circumstances where I think it probably makes sense to do this, and we're quite close to that now. Or you just say, well, I guess it's always going to be in our back pocket, and we'll just kind of plod along to some sort of conclusion on our main number one priority business model, which is such and such. Yeah, good. Why wouldn't you go for the cash now? Is it because it's a distraction? Because why?
Well, a real reason, right, is that is management focus, right? That's a big part, right? But the other one is what are you being valued for in market? And you have to be conscious of what you're being valued for. And if we're being valued for our potential to grow our resource, much more than we could easily get into production, you don't want to confuse market on what you're being valued at. And it's very similar to, I've got one great project here and I've got one great project here as a junior. So 1 + 1 should be 2, but it's not in a junior market, right? It's maybe a 1 + 1 is a 1.1, right? You're always creating your value normally in this market, right? And our compelling valuation is based upon the ounces we have and the more additional ounces, right? So until you can compete on a cash flow basis, right, and a multiplier on your EBITDA on an annual basis that compares to the valuation you have today, you don't want to confuse market. So I know it's difficult, but we're watching that. And that way, if we do something, I would probably pull the trigger, but it's on a much smaller scale that's more... it's piloting, it's training, it's for innovation, et cetera, but you have something tangible that's sitting there that you could scale quickly. Right.
But it's okay, I get it's a balancing act, right? But for me, I'm going, right, if I can get into revenue quickly, then I'm not going to dilute the purchases out of my current investors. They're going to have to be a little bit more patient, but the only reason I'm thinking of doing that now is because the market is not valuing anything. Everyone's, at best, moving sideways. I've seen great precious metal projects going downhill this year, right? So, and it's not a big time frame where here we are only in September.
Definitely
already. But if the market's not going to reward you, you've got to at some point go, look, I'm going to have to pull the trigger on this thing, because if I see 2025 going the same way, what the hell's the point? I may as well say, look, it's going to take the timeline out. Yes, it's less efficient, but it's going to cover our costs, and we're going to be doing exploring, and we're going to be able to do the things we also want to do on the flagship business model. And I'm sorry, guys, but I can't keep diluting the heck out of you. Do you know what I mean? And not just this,
Absolutely.
maybe not a you thing specifically.
I don't think, and silver is you know, you got to look at each market, right, and each sector, right? I don't think we are there today, but as you are saying, I like the ability that if I have to, I can pull that trigger. If I think that the work we're doing is dilutive, right, then we shouldn't be doing it, right, and we should go down a different pathway, right? I don't think we're there, and I don't think the indicators were, you know, it's been a little choppy, but I think overall the expectation of a new bull was always going to be choppy at the beginning, and it's been a little difficult, and some of the indicators we need to get things moving, obviously in the beginning hurt, right? There's a flight to cash in the beginning and some of these little bumps, but I don't like being driven and just praying that I'm not going to hit a brick wall, right? I want some levers and steering wheel to be able to adjust and move.
Give yourself some options, which is great. Okay, we love that. So if I'm a silver investor, apart from being just, you know, drinking the Kool-Aid, going silver is awesome always, and it's the market's fault, not mine, not the company's fault. And there's a lot of people like that. Okay. If I'm not like that, and I want to believe the thesis, I've got to go, right, you talk about this 20% number contribution to, you know, solar panels, etc. Industrial uses up, not a lot of primary. Your ability to be in a lowest quartile type producer potentially really, really helps stories like yours. I would need to believe that if I'm going to give you some new dollars to spend, that you can create me $2, $3, $4 worth of value from that. You as CEO, looking at the market, perhaps even more eagle-eyed than some of the investors, and going, geez, I know this is the right thing to do, but I'm possibly not going to get rewarded because I haven't seen it in the last year, 2 years, 3 years, 4 years. So that's the...
I don't know if that's true, and I think that we see truly, and I've watched this over time, there is a class of projects where I think that you have a real tangible. Remember, I'm not in the discovery phase of, you know, that excitement. How good is it? What's our chances? We have a resource and we're growing a resource. We're in that stage. We can be a little bit more methodical. And I know, and I've watched our valuations over time, right? And I know it's not going down, at least in the solar. I've seen in other, you know, you look at copper, it's gone down per pound in the ground, right? So I know what our valuation is today based per ounce in the ground. So I know that if I can add more ounces at a cheaper price than I'm sitting, I know I'm going to create
based on the last 6 months, year, 2 years?
Well, we've been watching this for a couple of years in the silver space, right? So it's been quite solid. It does move with a beta to silver price. But as long as we, you know, even we're just bouncing near this 30 layer, but you know, it's not too different. We are today at $28 than when it was at maybe $24, which is surprising. So it's kind of held in there. But when it breaches that $30 mark, it really seems to really put some adrenaline into it. But I've been watching it over the 2 years, and I've been able to say that our valuation per pound and per ounce in the ground hasn't changed dramatically.
For me, it's a sort of like, you know, I haven't historically been a big silver investor. Like, I like silver. Like, much the next guy is, I think the speed at which it raced to 30 got people excited. In the same way people got excited with the lithium boom, in the same way people got excited when copper went to $5 earlier a few months ago, and then back down at, you know, whatever it's 420. Do you know what I mean? It's the speed at which it goes changes the psychology of it. I'm more interested in a creative, steady growth, and I'm sure you are too.
That's much more
so.
And I'm going to say that as a mining engineer, I had certain metals I would never work in. Like, I would never go into lithium for a very special reason. It can race, but it's not a deposit problem. Right? You get new production into line, and it floods the market, right? Mm-hmm. And even over the many, many years, silver had that specialness to it in terms of people that liked it, etc. And I think it's actually it's hurting the market now, because now that the fundamentals are really there, you're seeing it right in front of your face. Like, guy, you've been telling me the same thing for 20 years, right? I almost feel a little bit of you inside of that you're saying, I've heard this story for so long, you know, that it's hard to change my perspective.
Because the byproduct thing is such a big deal, right? It's like non-core, non-primary production. It's a big part of the market. That not being able to read or understand that, for me, was always a difficulty. We didn't have solar when I first started looking at this.
That is correct. And that is the different, number one fundamental change, is we've been hearing it for 20 years. Silver is an industrial metal, but it really is now. Now it's 60% of the demand is industrial. Solar alone is 20%. And you're seeing all these factors that won't go away. So it's less, how much investment is coming, how much is it going to lose, how much is the ETF going to take, how much people are going to buy coins, how many are going to, those are very hard to measure what those look like when you have a solid stream of growing demand and a limited amount of supply. And a limited ability to bring on new supply. That those are fundamentals that are undeniable.
I think the other things that are affecting my positive attitude to silver now is this kind of reset. Partially, things like Mexico. That's really kind of come up against in the last couple of years, 10 years or so, right? Politically, perhaps the support wasn't there. I mean, it's such a great mining history, really, really does. But there were a lot of stories in there as well. If I counted all of the just Canadian alone. Hodlick stories, and it just people jumping on the bandwagon. It's going to be always fine. It's always going to be great. For them to suddenly hit a brick wall like that, where time becomes money to them, it'll kind of thin out the market, and that appeals to me a lot as well. So those who can survive,
right now. Yeah.
Yes, really thin, which is great. I think it's great. I like it. Sorry for the companies who can't make it, but there's a reason for that.
I just had a conversation with another CEO today who was obviously kind of down and. It's been tough. And I said, just that you survived says a lot because so many just getting through. That means that you've stuck to your fundamentals.
Yeah.
You wanted to be with good projects. You wanted to do the right things. And that has allowed you to get to this place so that when things improve, you're already in a completely different position because most of those people show up late to the game, right? And it's just so much static, right? And so much white noise. It's hard to separate people out. Right. And then the average retail, everybody's getting into it. There's all that excitement and they're buying, tulips. Right. So just I think this is a good time, even if somebody's never been in the sector, to start paying attention to who are the companies around. I always say when I go to PDAC and 90% is moose pasture, it's over. Right. But when you walk around PDAC and you go, you know what? 80% of these companies are legitimately solid projects and management teams. Though right now is the good time to know who's who in the zoo, because when it gets exciting, there's all sorts of new
well said. I think you've got to be in the game to play the game. So well done for people who are there staying around to be able to have a chance to move forward. I think if I'm an investor, retail investor, what I would advocate to them would be don't go for the hopium element of this, which is the stuff which companies are promising to do. Discount that completely and go on what they've got today. And if you like those fundamentals, you're already ahead of the game, okay? Because if you've got a resource, if you've kind of got a very clear route to market, whatever that exit point may be, those are all good things. Great, in your case, great thing. Cost quartile, where are you in that? Ability to drive margin. Those are the types of companies you look for. And don't worry about what may come, because statistically, I think I'd be correct in saying this. If I discounted most of those, I probably wouldn't be far off the mark in the sense that they won't make it. So that is the life of
That's correct.
a natural resource investor. Well, enough rambling from me. Really good to see you. You've got a stack of meetings lined up. I know you're wall to wall. It's quite busy out there, huh?
It is very busy, which is exciting.
Exciting.
Yeah, and seeing more corporates too, which is also very exciting. That means that they are going through the same conclusion. They've never seen better valuations, and they're looking for opportunities before the feeding frenzy starts, right?
Yep, they are. Good to see you, and thank you. Cheers. Bye.
Cheers.